And so once again, we've already taken, we've got bullish market bias. However, we've targeted our external highs, and when external liquidity has been taken, we have the potential for a reversal trade. In these situations where we have a reversal trade, we can take trades targeting intraday liquidity, and that includes our session lows, which we've already taken. Down here we took our London session low and our Asian session low, and so now we have unswept session lows from the previous day. On Wednesday, we had Asian session and London session unswept, and so price is most likely going to target that today. And then when we get that, because we've swept our external high up here, if we are able to close below this level and then go for this candle, this green candle, that could be an indication that the market is about to have a further decline. And in that situation, we'd have nothing preventing us. As you see, slight fair value gap, but if this engulfs, then we'd have nothing from preventing us from going down to retarget this area down here, and potentially liquidity here, as well as the liquidity down here. And we've been looking out for this for quite some time. And now, so because we've had our sweep of external liquidity at the high side, this is where institutions would most likely want to offload their positions if they did want to get out. And so we'll watch what they do today. If we continue with this, we know the market's trending. We also know we have a session liquidity map, and so we'll draw that out really quickly. We've got this fair value gap right here, and so this comes in perfect with these levels of liquidity right here. And so we'll watch to see if we get a massive bounce here. Ideally, when we get into this area, you should really exit half the position, leave the rest to run, because we do not attempt to trade through levels of liquidity. And so we want to take off partials and be content with what happens with the market afterwards. All right, moving forward, we have a fair value gap. We have internal levels of liquidity as well. We've got our previous day's lows, which is what we're targeting today as well. We've also got previous session lows, which we swept earlier in the pre-market. We swept London session and we swept Asian session, and so we'll watch out to see how much further low we go for the day. This level is going to be important as well, our external liquidity high, because if we do get a bounce on this level, it could be indicative of price regaining and recontinuing the uptrend. So we'll watch out what happens here. Nevertheless, just to make it clear, we're positioned short, looking for price to target unswept intraday liquidity levels from Wednesday. And so that's what we're looking at today. I got positioned in the pre-market. I got positioned in the pre-market at this level right here. I have a 100-point stop loss. Alright, the reason why this is important, it's important to understand why I got positioned here, is because this trade actually occurred here, and so this was the real optimal place to get positioned. We had our sweep of liquidity yesterday, and then we had our red candle print, and so this should have been the trade. And because that wasn't a trade, because we didn't position here, well, I did, but I didn't hold the position. Because we didn't position here, the market's already turned slightly bearish, and because it's a reversal trade, we aren't allowed to get in aggressively, and so the only other opportunity to get short would have been here, and that's because this was a target. This was a trade in an attempt to target this level of liquidity, and this sweep occurred in the pre-market. And once this sweep occurred, there's no other opportunities. Unless the market rallies up at the open, there's no other opportunities to look to get short, and so that's why we got positioned here. So as you can see, the crash continues. We ended up hitting our targets yesterday. We hit this target. I left a little bit to run. I ended up closing the entire position. I think around this level down here. No, it might have actually been here. It might have been here. I closed out the position, and then I got out before this next decline, and so that was my P&L for the day. These were the shorts that I took. As I mentioned to you earlier in the video, I did get short at a higher level, but then I closed out the position. I wasn't comfortable holding that, but and so yeah, we ended up having quite a large decline yesterday, which was perfect. And as I said, it seems like we're about to crash. And so if you take a look at my trade, as I said already, I got in short in the pre-market of New York, and that was around 115. After realizing that this entry up here that I initially got into was the ideal optimal entry, and then we caught a majority of the position. I closed out here, and then the market just continued this decline. And so this is what happens when you're able to make predictions in a market at a high level. You know exactly when a crash is coming, and to be fair, I have been predicting this crash for a while. I do anticipate the crash will continue slightly further, solely based on the idea that we're about to double top here, and so once we double top and close below here next week, we should see the decline aggressively target the liquidity at this lower level here. And so yeah, we've had quite a good week. I'm expecting another payout next week, and so yeah, this is the level that I trade at. This level of consistency and this level of accuracy, it didn't come overnight. So that's why I urge you to join me every day, 8:30 Eastern Standard Time. You'll be able to see how I make predictions in the market, and hopefully you'll be able to learn something. Or just join me for the journey, you know. But nevertheless, I appreciate you being here. I'll catch you in the next one.